welcome to the next installment of Charts in Perspective, where we use charts to dive into the world of economics. I'm Jennifer Nash, an economic and market research analyst for Vetify. Today, we are going to take a look at our monthly update of the total return roller coaster. This video will take us through an interesting set of charts that will especially resonate with those who follow economic and market cycles. But before we begin, let's establish what total return is. Total return refers to the actual rate of return of an investment over a period of time. It includes interest, dividends, capital gains, and any other form of return. So now let's get to the charts. Let's imagine that 5 years ago, in 2019, you invested $10,000 in the S&P 500. How much do you think it would be worth today, with dividends reinvested and adjusted for inflation? Our first chart helps us answer that question. At the end of March, your $10,000 investment from 2019 has now increased to $16,666. This means your investment has a 10.26 annualized real return. Had we posed the same question in March 2009, your $10,000 investment would have decreased by a third to a depressing $6,654, representing a negative 8.12% real return. But what if we increase our time frame? What do you think the value of the $10,000 investment would be after 10 years, 15 years, 20, or even 30 years? As we go through the rest of this video, we will extend our time frame and examine each of these scenarios. Now, this series is called the Total Return Roller Coaster for a reason. The light blue line in our charts will represent the annualized real returns for each time frame. As you can see from this first chart, there are numerous ups and downs, similar to a roller coaster. But as we extend our investment horizon throughout this video, keep an eye on what happens to that roller coaster. With each chart, we will increase our time frame, and you'll notice that the roller coaster becomes less volatile, with higher lows and lower highs. So first, let's increase the time frame to 10 years. The annualized return becomes slightly smaller than the 5-year time frame at 9.66%. At the end of March, the $10,000 that you invested in 2014 has now grown to $26,175. The 15-year time frame has a larger annualized return than both the 5 and 10-year periods. Your $10,000 investment from March 2009 has now grown to a shocking $68,639, representing a real return of 12.91%. Next, our 20-year time frame. After 2 decades, at the end of March, your investment of $10,000 has grown to $42,305 for an annualized real return of 7.23%. I hope by now you've been able to see that as we've extended our investment horizon, the roller coaster has become less volatile. Here in our 20-year chart, notice that there is only one instance where there has been negative total returns. And finally, an investment of $10,000 made 30 years ago has now grown to $99,004 for an annualized real return of 7.67%. Again, the volatility decreases further with a 30-year timeline. But even for that 3-decade investment, the annualized returns have ranged from just under 2% to over 11%. As these charts illustrate, and as many households have discovered during the 21st century so far, investing in equities carries substantial risk. That's all for our discussion. Thanks for taking a ride on the Total Return Roller Coaster. For more economic and market insights, you can find my content regularly on the Advisor Perspectives website under the AP Charts section.